I'm Eric L. Donovan, the Mindset Disruption Strategist. Let's talk about investing. Actually, let's talk about why I hate investing. But before we do that, don't forget to click the button and subscribe to this channel to make sure that you know that we're putting new content out and you know where to get that content. And then in addition, you need to hit the bell so that you get the notifications of when the new videos are coming out on a regular basis. I've got a lot of great content coming out to you to help you build generational prosperity and impact. And I could not be more excited for you to receive that and want to make sure that you get updates every time we're putting out new content. So it sounds a little crazy, right? It's like, I want to talk about investing, and what I want to say is I hate investing. You're like, Eric, you've lost your mind. Well, actually, I'm actually going to invite you into this. I'm going to tell you I hate investing, and I think you should too. And I'm going to use a little bit of vernacular here, so just so that you understand what we're talking about. See, when I use the word investing, I'm talking about this entire concept that an entire industry has grown up around. There are television stations, there are newspapers, there are magazines, there are tons of different places, and there's even websites and probably YouTube channels that are going to talk to you about this idea of investing. And I just want to share with you that they've all missed the point. It's not that I'm against what you would call investing, which we would define as actually owning high quality companies that are making a difference in the world. And there's going to be a whole video series that talks about all of this and unpacks all of this. But the problem with investing is this word has been hijacked. The entire industry has taken this word and has put their own thoughts and their own ideas around it in a way that is brainwashing you, causing you to think incorrectly about what it is you're doing and why you're doing it. And I'm going to prove it to you today. So the reason I hate investing is the entire way that the industry is doing it. And it starts with this first point. It starts with this. When you think about investing, the very first thing that they will lead with is fear or greed. Stop and think about it. You think I'm kidding. Look at the headlines on the newspapers, on the magazines. It's one of two things. It's you should be afraid of this headline or this event or this thing that Congress is doing or this thing in the economy, right? You'll see that on a website. You'll see it on a YouTube video. You'll see that in a newspaper. You'll see it in a magazine. You'll see it all over the place. Or a headline that'll be related to a greed standpoint. Here's what you're missing out on. Oh my goodness, this was up X% and you missed the boat. Oh my goodness, if you don't get on board right now, what might happen? It plays with your emotions, either side. So rather than making a rational decision around why you would purchase something for long-term ownership, it causes you to make an emotional decision to buy or sell, an emotional decision to put something into your investments. And as we're going to talk about that leads you down a darker hole without you even realizing it. The second reason that I have a problem with investing is it detaches you from the companies that you own and their impact. So much of this investing world is about putting you into mutual funds or putting you into ETFs, exchange traded funds, or other products that are a conglomeration of a bunch of different things all mixed together. And when everything is all mixed together, then I end up with, oh my goodness, the S&P 500 was up this percent, the S&P 500 was down this percent, or the Dow did this, or the Russell 2000 did this. And it's all these things that I have no connection to and no idea what anyone's trying to say anyway. It just becomes a lot of mumbo jumbo. But when you own things, when you make a conscious decision and you evaluate or partner with someone who can help you evaluate, what you do is you own a company. I make a very specific decision to purchase company XYZ because they're doing this based on the current economy. They're doing these things. Maybe it has to do with inflationary positioning. Maybe it has to do with things that they're doing in the marketplace. What's their impact? What kind of impact are they having on their employees? What kind of impact are they having on the marketplace? What kind of impact are they having for their investors? Are they looking at it from a holistic standpoint? One of the things that we have found to be true is companies that are run really well with a long-term perspective in mind tend to perform better over a longer period of time. But you have to be very specific in looking for those types of companies. And so keep an eye out for videos that are going to be coming out later that are going to talk about how to identify the right types of companies and what they look like. But when you focus on just investing and owning some sort of random pool of investments, it may tell you that you're being diversified, but what you're missing out on is what's really sitting inside of that pool. The other thing that a lot of people find is sometimes there are companies that are doing things with their capital or doing things in their business that really kind of violate their values and what they stand for. Companies that are actively doing harm to other people. And we found over the long term that companies like that don't perform as well longer term, but they can show up in a pool of investable assets. Here's the other thing that this word investing gets you caught up on. It focuses you on short-term outcomes. True ownership of a company, understanding why you own a company, and cutting out the fear and greed where you're making a decision on, I'm going to own this company and this company. And I'll give you just a real quick highlight because they sell this on so many of the products on these things that you need to own. It's actually been found that you need 25 stocks to have a well-diversified portfolio. You need 25 really good companies to have a well-diversified portfolio. Now, this is not specific stock advice. I just want to give you education around this. But most of your financial advisors and everyone else won't tell you this. They completely miss the boat on this front because they're so caught up in investing as opposed to really thinking about ownership. And then the other thing that happens with investing on the websites and the channels and everything else is, here's what happened today in the market. Here's what happened last week in the market. If you're going to own a company, let's imagine you opened a company. Because this is about owning companies, right? If you open a company today, do you want somebody judging you every single day on how you did and how you ran that company? Or do you need probably 3 years or 5 years or 10 years as you put out your proposal of here's what we're planning to do and here's how we're going to operate this company and here's the market share we're going to go take? You need time and you need the exact same perspective when you're buying the companies that are inside of a diversified investment that you want to hold. Again, ignoring that investing term, but you need to have a longer term perspective, but you're surrounded by financial pornography, television stations that are yelling at you and screaming at you every single day, selling you on fear and greed, people that are putting in front of you newspapers and websites and apps and everything else that are telling you on a short-term basis down to the minute things that are going on in the marketplace. It does not matter when you are an owner. An owner has a longer term perspective. An owner understands that we may have a temporary market hiccup, but I bought this company for this long-term 3-year, 5-year, 10-year perspective. Now, if things change for what the company is doing, then yeah, you might want to change companies. But that's why your research and your connection to what the company does and its impact gets to be so important. And then the last reason, the last piece on why I hate investing, and you should too. When we focus on investing, what we end up doing is we ignore the high fees. Go look at the fees inside of the products that you pay. And then if you have a financial advisor who puts you into products, so they get their fee and then there's another fee on top. And you end up getting feed to death. The people making money are Wall Street, not you. And when you can own the individual companies, each individual company makes a difference. The other thing that ends up happening inside of these investment products is unnecessary taxes. When you own your individual companies, you control your own tax outcome. Now, sometimes you are going to have to pay some capital gains taxes depending on what some different options and how you go forward. I have another video on why capital gains taxes are optional, but that's not the point here. You can take more control of your taxes when you're not inside of an investment product. There are many times that mutual funds and ETFs have spun out capital gains taxes in a year when someone didn't sell that caused them extra tax burden just because of the product that they used. And so when you've got unnecessary taxes inside of your investing, well, it can get to be a problem. And then the last piece that I hate about investing is inflation is a big problem. We're seeing it be a bigger problem today, but even when we haven't had today's pressures, it's always been a problem. And there are so many investment products that are out there that talk about reducing volatility or helping to try and keep your downside risk limited. And what they don't tell you is anytime you reduce volatility or you try and limit downside risk, what you're actually doing is shrinking your long-term performance. And the only investment class that I found over the long term that actually keeps pace or does better than inflation, actually there's two, it's real estate and it's individual companies that you own. So that when you get into a product that's trying to mitigate this risk that they keep talking about, because they're not focused on owning, they're focused on investing, then you end up actually falling behind from an inflation standpoint. They get you to focus on the product, and that when they have you focus on the investing product, again, what you miss is high fees. You end up with unnecessary taxes. You end up missing out on the whole reason that you would own companies anyway, which is for the performance to keep your earning power ahead of inflation. So I started out talking about the fact that I hate investing. I do. I hate what the industry has turned it into. What I love is owning really high quality companies. Companies that I believe in for the long term. Companies that have long-term potential. And as I said, I've got another video coming out soon that will talk specifically on how I look for companies like this. But I'd encourage you to think like an owner, not an investor. Because when you think like an owner, then you think like someone who's making an impact. You think like someone who is building and creating generational prosperity, and you eliminate all the noise and you start to understand that everyone else around you is just trying to confuse you while you're trying to build something that will last for generations. And isn't that what we all want? God bless you. Have a great